Hello, friends from the inner circle, and welcome to a new weekly recap over here in our channel. Now, guys, we're going to make here a very detailed recap where we're going to go over all the loser traits, all the winner traits, all the missed traits which are fitting in our edge according to our strategy and so on. I will speak very detailed about everything so I can really reflect this price action together with you. Now, to be honest, this week was not my best week, so also me, I did make many mistakes. As I explained to you, there are sometimes scenarios that do not occur that often. Still, it's important for us to know them so that we are aware of them, because every other trader would say, yeah, it was a difficult week, and there are difficult weeks in the markets. Now, me personally, I'm not a supporter of this theory. I'm a very big supporter of every single movement over here is occurring for a specific reason, so everything is reliable, so you can always say 100% why the market did a specific movement. And whenever things look unclear, it is only because your strategy has at that point probably a little bit of a problem, or you are the one who used the strategy in the wrong way. And according to our strategy, I can say that 99% of all situations that are here can be interpreted. There is probably 1%, which, yeah, is not 100% interpreted, but even that 1% can be interpreted. But I'm just saying it's super unrealistic for us as a human to use the strategy 100% correct the whole time. More than likely because you have like a few scenarios that could play out, and it will depend on at the end on your intuition. And your intuition is something that you develop over time. So this is why using the strategy is really not possible in your first month here. It's not possible in your second month, in your third month. But it can be really good possible after the 4th, 5th, 6th, 7th, 8th, and so on. It really depends on this point how experienced you are already. So like if you trade it right now for 1 year SMC, then you can do it in your first month. If you only traded normal strategies, then it's impossible for you to trade this in a few months, because you need to understand the first way, the way of the SMC, then to understand where SMC or regular SMC fails and where we can take our advantage out of this. And also, if you're just trading a few weeks or just a few months SMC, then you probably still do not get it to apply it the right way, because you're still in the old behavior on using it, and that could be also a big problem for you. Okay, so therefore what I wanted to say just at the start is it needs time, and this is what we're doing this weekly recap, because this is what can help you really the most, by reflecting the whole price action, by understanding it, by looking what went wrong and why it went wrong. It's super important, because just mapping out that something went wrong is super easy, and to draw it the right way then afterwards, that's also easy. It's just more difficult to really understand why it went wrong, and to really have clean rules and clean understandings why. Okay, and that's our job today to do. So very important. It will be a little bit longer video, I know, but please use this video, open it up on a second screen if possible, and try to do it with me. Okay, try to mark it, or you watch it till the end, and then you go to the charts and you're making the same recap for yourself, and then you see how often you've been right. Okay, in this case the whole solution on how to do it and how to apply it the right way, all the potential traits and so on for every specific session, and therefore you should actually really master it when you're doing it afterwards. And if you cannot even master it on the back testing, then how do you want to master it on the real markets live? Okay, so let's get it right into it, I would say. So this is right now, I already brought it all the way back down to Monday, and we start very basic with the higher time frame. We can start even with the daily and so on. Not really necessary, because we know already the whole situation. So very important. What we can see here, 4 hours and so on, market is trending down, right? So it's really moving down. So our basic idea is follow the trend. That's super important. Now, people think when you just see the markets doing this kind of thing, so moving down, I like to use here this, oh, price is moving up, right? For them, here is the first break, second break. So they think that price is right now already liquidating this whole thing. So the belief already starts here. Yeah, you can see uptrend, you know, higher highs, higher lows, and so on. You expect price to really go up higher, right? And that's exactly the point. This is why price here is not doing this as the majority is expecting it. In fact, it would just fake you out, move even lower because it's following the overall downtrend. So marking right now the structure, the way and how you can see it here is wrong, because yes, that's lower time frame structure. But what you need to understand is what you really want to mark is this, okay? This, and then move down. So what price will always look for is some form of supply to react from. It's generating here some form of liquidity. And why is this liquidity? Because people think this market will go long and so on. But at the same time, you always have people who are looking at these resistance levels already for the drop, because they think there's the drop. They see like, okay, I got here this supply, for instance, so we need to see price going down. That's totally wrong, because you need to understand in these kind of particular situations when you are hitting a major OB and when not. In this case, you can see then pretty wonderful on a daily and so on that, yeah, this is the supply zone and nothing down below. That's what people always miss out. You know, they do not think in higher time frames, but you need to think always in higher time frames. That's super relevant. And right now here, the same kind of thing. If we want to look now what price is doing, you just need to understand where are the higher time frames. And you can see it here pretty clear. You got the supply, right? You got here your liquidity, okay? You got here your break. So price went lower. Targeting liquidity, targeting the other liquidity, going lower, preparing for what? A mitigation, and then dropping lower. That's the basic principle to understand right now how market is moving, and that's right now our ID. Just by looking on the daily and on the 4-hour, we can spot, okay, price will dramatically go down lower. Of course, we need more confluences for that, because if you look here now to the left, it's not always clean which OB price will use. Like for instance, you may say that's the OB, right? If you look here, so why didn't price come all the way back up here? Well, if you will go here, reflect it all the way back down, you will see that there is something here, and you will need then to understand this whole PA, and hopefully you can see it right now like I do. This is Wyckoff in this case. And like I said, we do not use specifically the Wyckoff concept, but we use the liquidity concept of Wyckoff. And what we can spot here is like, this is move up, move down. That was like, in this case, the liquidation of both sides. So the market took up buyers and sellers, and with this move down, they made the clarification, okay, we want to go down, because the move down occurred for one specific reason, because there is the OB here. So price just used this OB to go down, and the result was at the same time a break of structure and so on, which is cool, you know. I do not really trade break of structures, do not look too much on that, but in the right context, a break of structure is a lot worth. And in this case, that's the point, you know. So price moving down, and then as you can see, here is also the point where people think price will go down, and that's the thing, it will not do. It will just liquidate it one more time, because where it wants in reality to go is at this area, something on the lower time frame is a supply zone, which is telling you that this high here is liquidity, and then it will drop down. You always need to see it from that perspective. The market would only go down if it has enough positions for that. And what do I mean by enough positions? Well, they pushed in the past the price here all the way back up. This push liquidated here a lot of positions, as you can see. It liquidated a lot. One of these hold it. Why? Because that one is their protected position. What do I mean by that? you can see they initiated this whole downtrend. They will not give up on these positions. So like this one, this is the extreme one. That's the one that they're still holding. But with this up move, what they did is they manipulated all the people who thought a price is going to go down from here or will go down from here. So they took them out, and then price moved down. That means exactly here in this whole up move, you got buy positions from them, and you want to see them closing these buy positions. Now, how are they going to bring the price all the way back up? Well, in reality, doing this. Okay, moving down, lower, people think again, new downtrend here, and that's exactly why this gets liquidity. Boom. Because there are the positions. So if you understand this aspect, then price will always return to the OBs. And this way you always get it where price will move. And that's the point. It's just trending aggressively down then at that point. So they're exchanging right now here at the top the positions. What does that mean is these buy positions got closed. Okay. Of course, some of them with a small loss, some of them at break even, some of them even at a profit. But the reason why they're doing it is just because they want to initiate here their sell limit positions. So from the start when price was here, they initiated from here longs in order to target their sell limit position at the top in order to bring it then all the way back down here. Then from here again buy, because what? They wanted to close here this supply zone that they had here, and then from there everything starts to go down, and the same game will be repeated again and again. And this play you can do on all time frames. So this is why making a bias on the higher time frame is the same as doing it on a lower time frame. Pretty simple. Just need to think always in the bigger sizes to understand where is price to go and when we'll get an OB liquidity and when it is a real OB. Okay. Now, back to this. As I said, same game. We got here our liquidity right now. We got our nice break here. So more than likely, price will go down, push down lower. We'll use this here as order flow to continue to build up bearish positions. Let's go on the 4 hours. Now, we are on the 4 hours. And 4 hours, I can see from the start, when you have like this kind of OB, which is crazy at the top, looking exactly in the way and how it looks here, more than likely it will get, if price will come here, it will get run. Therefore, personally, when I see OBs like that, I don't really want to see price coming that much higher. So a potential could be price just to come here and then to go down lower, because here you can also see these are equal highs. So if price will come all the way back here, more than likely they will do this. So this is why we don't like OBs like that. More than likely, because we identified the overall higher time frame trend and anything like that, we are bearish, right? So we know market will at some point go bearish. Now we need to understand where is price stopping, or why did it stop? Well, it stopped here at this demand. This demand could bring price back up, but how far? Will it stop at some point? Well, super realistic that it will stop at some point. Will it be this OB here? Is it right now already the stop? Well, we will see. We will see if this is already the stop. We don't know. Why? Because we need to look to a lower time frame as well. But what we can see here is price broke structure here. This structure gets liquidity for the OB down here right now in this case. So more than likely, you can expect price to go up higher. But this is, like we said, not a clean OB. So maybe if we use something on the lower time frame. So we could go to the 1 hour, for instance. 1 hour, same OB. Not clean to me. Let's go straight to M15. M15, you will see price, okay, we're stopping right now at this OB. Let's just use this OB and let's really map it out how it looks like. You can see pretty nice, okay, it has this, it has liquidity, okay, everything cool. Popped up, moved down, okay, cool. So this OB could work, right? What about this? What about this OB here? Is this a valid one? Now, personally, I'm not a fan of OBs like this. But if I need to choose an OB where price will more than likely stop, then it will be this instead of this. And this is exactly where I would decide to take this. Pretty easy, pretty simple. So personally, I would expect price to come to this OB rather than coming to this one, because look at this. On the 4 hours, the OB looked nicer. Looking right now, I'm 15, you can see just a straight line, so it's just kind of an imbalance, but we know at the same time that this is news that caused it. These positions will be victim at some point, but it doesn't need to be right now. You can see here order flow and anything, so it's already, they closed already some of their buy positions. Of course, they still have buy positions in it. Basically, this whole movement is engineered by them, but still, here you do not have really a clean OB. This is not a valid, nice OB that we're looking for to trade from. So more than likely, it's invalid to expect this. So what we do is we expect price to go up higher. But now let's just see how price will develop, because what we want to see is how Frankfurt and London will set up, because that's the sessions that we trade. And this is the next point. We need now to understand the Asia liquidity, how it's getting into place. We use 11 o'clock. And we use till 7. That's specifically our Asia liquidity. Now, what do we see? Right here, we see price trending down, and maybe it is in the hunt right now of this liquidity. So it hunted this, everything here, this, here, these positions, this position, boom, just a strong move down. Where could be the next target? Well, if this new created bullish structure, why could this be even a bullish structure? You can see here equal lows, a run on equal lows, and a run of the next structure supported by this OB, right? But you still have another OB at the top. So your play could be this. One more time, liquidity, drop. One scenario. Second scenario, price move up, move down, or price moving all the way back up, which is, from my point of view, super unrealistic. Okay, so we do look here and we just start to map out this demand. Have this demand on our eyes. Now it's also in this case not an ideal demand. Why isn't it an ideal demand? Well, because you don't have a clean imbalance. I would like to always see clean imbalances when it comes to my demand zones, and this is what I cannot really see here. Great. Now we are about to have 8 o'clock. We have 8 o'clock, Frankfurt session. Let's see what it does. It's tapping into it, and there is actually no trade. Okay, I mean, anyway, you have here in this case, you have the bank holiday and so on. So for you, what you could look for is, if you are here on the lower time frames, you are watching this play and you see, okay, this is the point here, 8 o'clock. The point here is where price is. So we can go quick back. That's the point where the opening is. More than likely, you can spot from the start this OB. Because it's trending, you know, it's trending down and it's not tapping in any form of demand zone. So why should price go up higher? This point here could be liquidity for it. And then you can see prices moving down, breaking structure, which makes this automatically again liquidity. because it didn't mitigate that OB. Now you could say, yeah, but what if it follow order flow? Could be always an option, but why I'm not interested in that ID? Very simple, because we're not in a demand era yet. So we'll look at this, and it gets hunt. This is exactly where SMC traders fail their positions, because they think this is the point. Also, liquidity traders and all these other things who do not want to get on every single OB, they will also see, okay, this is my liquidity. Now we'll come into it. Now this will never work because you're not in the right context for this situation. And this is why everything depends a lot of context. And look at this. That one at the top is in reality your trade. You can go to the 5 seconds. You can look for additional confirmation. But as you can see, you already liquidated enough in order to see this movement happen. I mean, even this is like the preparation, and then boom. So when you see like this, you can see, okay, it will run on this whole liquidity, even this, as you can see, and then it will stop here somewhere at this top. And I like always to use a 1 pip. So we go here, go to 120, put it like this, and go. Okay. Of course, you could look then for scaling, you could look for more confirmations somewhere here and so on. It's just, automatically more riskier the longer you wait, because you want to go at this POI because your POI is valid and not because you wait for your confirmations. So I'm a bigger fan of that, just to get into trades whenever the POI is right. Specifically here you can see this is exactly the play. Boom, boom, let's go. Yeah, price moving. And TP should be at least somewhere here in the demand area. You could now go to the M5 and so on, try to look here for something to refine it a little bit further down. Oh, you have here a nice one. Even with imbalance, this is the OB that I personally like. This is perfect OB. So these OBs, when I see these imbalance, clean movement, these are the ones that I look for a nice buy, even with risk type of entries. Now you have one successful trade here from the start, probably exactly a 1 to 20. Not even. I will close, at least at this point here, I will close that, because you're moving against everything in this case. You cannot say you are going against the demand, so that's stupid. Look, it would have been even giving you really the 20 pips. Okay, that's just some kind of magical numbers on the EU, so I always go for the 1 to 20. You could risk it if you want. You could go now to the M1 here to look, do you see here something relevant? Well, personally, if I look here on the M1, I would not really see here something clean. So personally, it depends on your risk appetite here. I would say the safest is to just close it here, but of course you can risk it, go to the 20, or you go straight to the 5 seconds to see when you will get even the confirmation for your entry. And you don't get it here at this point. So instead of the opening, I mean, you should anyway wait for the opening. The opening gives you the TP hit here. So you could wait at least for the opening. That's also what I do. If it's still in the context and I got the opening, I still let it open. Okay, but it really depends. Yeah, then price is moving. That's exactly here. Always in the backtesting tool, 5 seconds looks a little bit weird and gappy. So I always need to let price a little bit run to see it clean. That's here a little bit of tricky situation. That's something that I explained also that day. I personally took right now an entry which is more advanced and has a lot to do with my bias. So personally, I had a very clean bias that price will go long, okay, due to the things that we already mapped out and so on, and I want to go into it. We also see price went below the 50%, so we are super low at this point, and price is starting to give you some form of reaction. For me, this is from the start a V shape, the way and how it looks like. So what I want to do is, because normally I will look here straight to go for something. But price is not even breaking this, and price is also not really forming something relevant. It just forms here some form of multiple touches, which is again liquidity. You could wait in a situation like this. Okay, let's see another sweep of that. And that's exactly what price is doing here. So it's taking out the high to go then lower to take out the lows. And this is the point where your 5S is giving you confirmation. The point down here is your confirmation. What you could do is, in this kind of particular situation, is also to put your buy limit. The moment when you realize price took out the high, it needs to take out the low, and you put it like this. It's an option. Personally, I don't like that because here still my stop loss would be way too big. That's what I don't like. So what you could do is now to see how price will develop and just enter based off order flow. This is the first break, internal break. This is the order flow. That was the reason on how I personally managed to take this trade. I just entered on that and I just let it open. That's it. Now, a cleaner way, and that's the point, guys. You always need to find your entry models for yourself, because it's not always clean, it's not always textbook and so on. But when you realize this, and that's what you need to realize is the play, you need to act, okay? And that's the point. You need to act according to the situation that you have. So you see this whole thing. Personally, I was super fast. That's how I acted. For me, that's the only or the first real valid entry to look for was here at this demand. Second one is you see a break. Okay, you see this break. You see price moving up and you see price engineering you here at liquidity, which means, hey, I want to go into the next demand zone, and that's this one. So you go here for a long, or you go in the next one, and so on. So it's pretty easy, you know, at that point. Now, I closed it because price moved so choppy, okay? So I decided to close it earlier. But also because of the fact that if you look this from this perspective, this kind of thing here is like your low. So the entry that I took is not ideal because it's quite at the top still. At the top, it's quite in the middle. It's here. You know, it's not ideal. Any of these entries are not ideal if it comes to the fact that price could potentially still come here, especially because it did took this. Still, it is in this context when price is here a valid V shape, but you need to keep in mind, whenever you have a choppy market, what is price doing? The whole target or the whole aim of the market is just to hunt liquidity and liquidity and liquidity, bring up people out of the market and so on. So this is why personally I decided then to close this trade. So I did close it specifically when price made this movement. Okay, I guess that was where I closed it, so here at this top. So I really made the resistance as my TP then, and I closed it. And as you can see, price then went up higher, liquidated more things, and yeah, continued to move up higher. Now it was even 11 o'clock, so at least at this point, I would have been closing it whenever it was, because that's not my session. Still, ID and everything is clean, so let's see what price is doing. What price is moving up, and this is a very cheeky move, because on the M1, you still have these wicks, which could be potentially an OB. Now, I don't like these kind of things, but what price did, and that's super relevant for us to know, is it created equal lows. Now, the equal lows got created, but why are they interesting for us to look here for this kind of setup? Because it did took out the high. So that means this is how they play. They engineered, again, sell limit to activate buy limit. So they want to get this out. And then from here, because you need to understand it was just liquidity, they engineered the buy limit down there here, and they pushed the price from there. So now the next target is to hunt at least this. and of course to stop at some relevant OB. So this is how you can target everything at the top. And while price is moving that, it will give you here some nice confirmations. So you can see it's super close, you know, it went crazy down in this case. Okay, so it could be, you know, let's see how it did. So we understand this is what price should not take out, because that's the mitigation, that's the low. That's what forms then from here everything. That's where they have their buy limit. So they don't want to go down lower. Yes, they will go down because this buy limit is again a buy limit to activate another sell limit and so on. So that's how they play. So even here you see equal lows there, but then with this you have triple lows. So this is just pure liquidity at some point, okay? That's what I also don't like, you know, whenever you're holding these kind of things, you don't like that to hold it too much. So that was the point where I closed, I guess. This one or this one? Let me check if I have it somewhere. Yeah, anyway, it's right now not really relevant. I just know I closed it at this level, if it was here or here. I don't like to hold my trades for too long, because that's when everything can get invalidating, because order flow is at the same time liquidity, and at some point it will target it. And if you have not the cleanest entry, like I didn't in this example, as you can see, it would have been taking me out. The cleanest entry is always here. And if you know you don't have the cleanest entry, you need to be aware of that if price will hit something. And in this case, look at this. That's here the OB that it used to bring it down. Okay. So when price took out the equal lows, you need to search and understand what price did here. And yeah, I mean, you can see pretty fast equal lows here. And you can see pretty fast your demand zone where you're looking for entry is here. Now, again, not an ideal one, but hey, it's not an ideal day where we are trading, right? So important to keep that in mind. But on the 5 seconds, clean demand zone, boom, boom. How you're going to approach that? Well, risk entry here from my point of view, or you see yes liquidity and you are entering here in this demand that created down here, and then you go for your buy. Boom. Where do you think price will stop? Well, at the next relevant supply zone. Could be this or something internal, because you can expect price to stop internally if you believe in that. It depends on everything. In this case, as you can see, it really stopped. Not in a clean OB. Really not in a clean OB. I mean, yes, this gets liquidity. That's the point. Normally it should come here from my point of view in this one. But what it did is it used just this range, which is also cool. Okay, it's this whole range. Went down, but keep in mind, it's bank holiday, so it's not a perfect price action, of course. But still important for us to know, because if you want to trade next time again in a bank holiday, you know how to do it. And look at this, you have equal highs. So more than likely equal highs have been the target in order to mitigate this range here. Okay, this range needed to get mitigated. That's how they did. So the equal lows was the liquidity to mitigate this, and this is how price then developed. Yeah, then you expect price, of course, to go down, go up higher, because more than likely you expect right now the Asia to get taken out to come up higher. Here, super cheeky move on the M5. Let's see if we can see on the M1 something more cleaner. Yeah, so even on the M1, it's super cheeky, because this was kind of the OB that they used. Would not be one that I would use personally, but in the context where it is, it of course makes sense, because you can see liquidity. This is just, you have here triple lows, or I don't know how many. So it is liquidity. Now we can also a little bit evaluate how the New York session played out. I mean, it starts here. So price is moving and it's engineering here liquidity for your OB here, to use this OB and then to go down to hunt these equal lows, plus in addition this one to go up higher. Yeah, Here, this is more clean, this one. Then it's just moving. So yeah, still with the purpose. That's why if you did to take this trade and you highly believe in the TP at the top, you can hold that, guys. So that's nothing wrong about it if you do. As you can see, Asia's even pushing it higher and higher, taking out the Asia high and so on, and boom, you know. So it's crazy, you know. It's really pushing then all the way back up. And imagine taking out this trade here from the low, which was textbook here at that point. If you wanted to trade this session, personally, I would never trade this session. So this is why I would never take such a trade now in this case. But possibilities here, and that's what I want to show you guys, because that's how you need to train and focus your eyes. Focus on where price needs to go, understanding this is liquidity, understanding price will need to go up higher, understanding that here these are not real relevant OBs. They could be relevant OBs in short term, but overall, because of the prices how it is here in this case, because it's swept at this low, it's creating a new uptrend. It needs more liquidity in order to stop. So you can see how many things we just put right now together in order to just come to the conclusion that price will come all the way back up here now, and where it will go next. Well, short. That's the next point. So what we do is we go and map out the Asian liquidity. But let's see now what the Asia is doing. Great. So Asia, 3 o'clock, 11 o'clock, till 7. Yeah. Now I'm not sure right now. This day, I think I did took a loss. Yes, I did took a loss this day because I was not sure about what price will do. Important for us to understand is this was a main mitigation. Therefore, the Asia will get protected at these points. Okay? You can see here, that was not a main mitigation. Yes, there was a mitigation. So, for the context where price was here, you know, when price was here, it was not liquidity. But at that point when it tapped into this demand, it got liquidity till at least this, and it will stop at the next OB. So now, from here, everything was engineered to make this. So this buy limit was engineered to trigger the sell limit. So which is right now the next target is this one. So price will go down all the way back down here. That's exactly what we can expect from here. So we go now and understand our next opportunity. And for me personally, that was this demand here. Now we'll explain you something about these demand areas. Well, first of all, they're not bad. It's not a bad one. Why? You have imbalance, blah, blah, blah. The only thing which is super bad about it is this. You are in a total victim of this liquidity. So if price wants to go down, and specifically in this case, if you map out the whole story and you understand, okay, we just took out a major liquidity. We made a major mitigation at this top. We have the Asia at the high. So Asia should not really get taken out at this point, and price would just go and crack down. So if you know these factors, more than likely, you cannot expect price to respect that one. And as you can see, what price is doing here is kind of respecting something here because it did took so much liquidity, and it's just moving up higher. So it's pushing, it's pushing, it's pushing. So personally, I would not find here any entry for my trade because I would not look here to validate this kind of OB at that time. So even this low one, it didn't really took that one, it did took out this. So for me personally here, no Frankfurt session trade because it's not a clean one, nothing valid, and I would just need to wait. Price moving till the opening of the London session. Now my idea at the London session was pretty clean. I just wanted to see price giving me some form of mitigation, and I wanted to be bullish that day. I was bullish as I was expecting price. I had a different story. Story was this one, that I wanted to see price taking out to high because I thought about price will go from here all the way to hunt this because it's liquidity and to stop somewhere here. It's a valid ID to have this perspective, especially because price did took out this. So you can really look for this. Now, keep in mind, everything is bearish right now. So this ID is just from the start a little bit risky, 100%. Also in the M15, we didn't tap into that one. So you could say it's like this. And you could say this is a mitigation. And therefore, this ID could even work out. But as I said, the M15 demand is not a relevant one. So even the lower time frames right now is not even telling you now 100% that the long is even a good ID. Taking out the high is, in this case, not really a good ID. It was just the ID good that we want to expect price to go that high to hunt the high. That's the only thing which is relevant. So, ID to look for long is automatically not good. At the same time, you could say, hey, I'm looking for a short. These OBs, not ideal for me personally. So this is why I did not even consider this whole thing. But you can see here, this looks already like an engineered move to push up higher, to make the main mitigation and so on. Break of structure. Now we are just in the hunt of some liquidity in order to push price then lower. That is the real thing that we should look for. Personally, I just stick to the M1. I understood, yes, cool. We take out now here some form of liquidity and we want to take a long to, go higher. Take out the high and again a new mitigation, new liquidity grab, and we should continue to go up higher. And then it was good. We tapped till the supply zone and this is valid. So the whole ID was valid. The only thing that I made wrong was at that day to not close here. I thought about, hey, price would go up higher. So anyway, I wanted to close at this. I didn't want to expect price to go up higher. So for me, just my setting was not totally right at that day. That was the only thing. So I was expecting price to go up higher. I mean, as you can see, we did not even make a 20 pip movement, and that's what I expect always from the market. So we didn't get even the 20 pip movement. So you can, I just wanted to hold it somewhere till this OB at the top. I needed to view everything as an OB because on the M5 it's not clean which one of these two will be the one that will bring price down lower. It could be this one, but at the same time it could be this one because the other one could be liquidity for the other one. Now you don't have here any kind of wick, so it's pretty difficult to determine this in this case. So yeah, that's all in this case. I would say more than likely, yeah. If you would be one who wants to be very secure, you would have been taking it like this, or you would have been looking from the start to take shorts if you would have had another story around yourself. And then obviously everything gets liquidity, I had then the stupid idea to follow still bullishness because hey, we just run on liquidity, so hey, why not going up higher to really make the clean mitigation at the top? And that was the problem in this case. And I was pretty sure the price will use here this demand as a trap and the supply zone as the real supply zone, and I wanted to go lower to look for this demand or even this demand here for a potential long. Everything stupid. Only good idea would have been, hey, go for the short because this is a trap demand where everybody's looking for. This is your liquidity for this short, at least to hunt this. So that was the idea. So I thought, well, okay, we hunt this, but here is an OB to stop, and probably we will use this one to go up higher. So in general, not bad, but more than likely still better to just stick with the short if you already understand that it should go short, especially after they took a loss. And as you can see, price giving you even additional sweep and so on. Also here, not clean on how to enter this because you got liquidity. Looking for this OB to go for a short, I don't know if that would take you out. Personally, I also don't know because here you can see liquidity. For me would be nice. I think this will me personally not take out because I would be aware of these kind of things I use anyway. 3 pipette more. I don't know. It would be a little bit tricky in this case. depending on how I would really place my sell limit at that point, or how I will make my market execution. Okay, because I do very often market execution, so when I see price moving like this, probably I would just enter here, you know, and that would allow me to make a stop loss at least this here. So I personally think I would not be taken out in the situation. But yeah, tricky. As you can see, not textbook. So Monday, Tuesday, you can clean say, yeah, it's not an ideal day to trade. Okay, even with the strategy that we use and so on, it's not clean. Monday was more cleaner, but Tuesday, as you can see, it's already starting to get here really choppy and everything. So it's not really giving you what you want to see in terms of what you see. But still, that was my failure, is I stick to the wrong bias. I wanted to see price going long, and as you can see, that was stupid, because price is moving, and will continue to move down, because you know what price needs to do is to hunt everything. Great. So price is moving down. You have the opening of London, New York, as you can see, is pushing up higher. Not one that I will look for, because no valid demand. It just took out this liquidity and it tried to give you a move up. Personally, I would also here stick more to the shorts, and I think that's exactly what it would do perfectly. So more than likely, you know, you see this, that's what it's looking for to do. You see this liquidity here. You can go to M5 to spot something. Yeah, liquidity grab, liquidity play, BOS on the M1. So not ideal. Again, this is price tapping into a big OB, but also here you don't expect price to come here. Why? Because then this would just get run. Order flow, liquidity, you know, nothing here is valid. You want to see price coming just at the top of the OB and go down, and it just had the only thing to do is to hunt this liquidity and then to go down lower. So what you should do is, in a situation like this, just look at how it's reacting. Liquidity, next OB, only one OB. This is only that one. Here, another liquidity play on a 5 seconds, and it's moving down. So it's a pretty obvious example if you look at here. Now, personally, I will not trade these hours, but if you think this is what you need to do, or you like to do this, go for it. Because in terms of the context, it's super valid to look here for a short, guys. Yeah, and then things starts to get interesting. We're tapping in some form of demand, and we can go 1 hour, 1 minute. Yeah, you got the opening here. Let's see very quick how the Asia looks like. I mean, it's not relevant in this example because you can see it already melted through. So somewhere here they generated the Asia till 7, and they just, you know, just liquidated the whole Asia session. Here for us, more relevant is to understand, okay, where is the M15? Where are we on the bigger picture? And we just liquidated a lot of lows. And as I said, because we made this main mitigation, our next target is specifically this one. And for me, this kind of demand that we see there is just a trap demand. So it will work out at some point, but it will very fast lose because it's a trap demand. That day, can remember pretty good. I did took a GU long. Same idea was here to take this long on EU. You can see here, move up, move down, boom, boom. So it would be still a nice valid trade to take. Specifically, if you look at the session, the opening of the London was here, but you see already how price engineered you this demand. So what your job was at this point was just to look here, buy limit from the low possible. Yeah, no. Okay, forgot about that. I was not that clean. So this is why I did took personally GU looked better to me. But here you can see this is your demand. So yeah, you needed a higher stop loss for sure, you know. So it was very fundamentally driven that day. as you can see, we had big news later on. That's why price was like this. It was just choppy. You had really no opportunities to really take a nice trade. So you can see, yes, you can go up higher and so on. You could have been holding it for a longer time period, but still here where you want to take a re-entry, there was no valid re-entry. You can go for your 20 pips, even 36 pips have been right now here some kind of available. I think 40, yes. Always go in 20 or 40 steps. Yeah, and then it should drop down because you got here another OB who could bring you all the way back down here. Liquidity that it grabbed, OB that's using more OB order flow, as you can see here, took out liquidity to come to make the range mitigation and so on. And it's just moving, so it's 100% not an ideal situation overall. Important is just to understand this is not a clean, valid demand zone. Still, it's acting. Why it's acting? Because it just went that aggressively to the downside and it left like this OB unmitigated. So price wants to go to hunt this liquidity to mitigate something, and then it's, as you can see, forming order flow, and you should look to take your entries on that. Now here you got to New York. What is New York doing? New York is going to push it a little bit higher to hunt additional liquidity and then to drop it all the way back down. Okay, so same play, liquidating something to mitigate something and then to go down lower, but also here no clean OBs, so overall, to be honest, this week not clean. It was too fundamentally driven, and that means the institutions are really just moving from one stop loss hit to another stop loss hit. That makes it also for us a little bit tricky. Okay, so if you lost this week a few positions, a few trades, it's totally fine. Here, this one would have been one possibility how you would have been trading it. Never in my life I would holding it all the way back up here. Personally, I would not do it because I would be aware of price just hunting here like these highs and then go down. Yeah, price is not continuing. It cannot continue. It's just dropping down. So you could just say, because you understand this is your trap demand, hey, this is my next supply zone, so probably this one will go anyway back down. So of course, it will not come all the way back up here, as you can see, pure liquidity. Will it come all the way back up higher than this? I don't know. Could be a potential that it will go like this, but more than likely, no. Why? Because the demand is not valid, okay? If the demand would have been valid, price would be 100% coming till this. Now demand is not valid, so price would just go crack down. We use just the next OB to make order flow so that they can mitigate their positions the way and how they want to do it. So we have now news, big news, and you can see how nice the big news played out because big news just made the same thing, order flow, just created additional order flow for the market. They took pretty nice liquidity and so on. So more than likely that was my mistake on Thursday. I thought about we need to go pretty fast short. And I explained you the situation anyway, pretty detailed on the last Zoom call. So I would highly recommend you looking on that because the whole idea was this. You have here this taken out. So you're right now really at the lowest low possible after they took out anyway a lot of lows. But it's something which was not when I was trading. More than likely price is about to continue with bearish order flow. Personally, now what I was expecting is, that was a little bit of my mistake, I understood that the Asia session liquidity was now like this. And F4, it is a supportive one. What I mean by that is we had this supply, which was kind of mitigated. Price tapped into it one more time and so on, and explained you that that was a clean, in this case, it was really a clean trade for the Frankfurt session to go here for a short, because you can see how price made this mitigation after it dropped crazy down. So you can see the opening is here, price pushing right into the next OB. Everything else here is liquidity. Price will use this OB to go down lower. So here, if you want to have more details on this price action, I explained it pretty detailed in the one Zoom call from Thursday. And yeah, then price, should go mitigate something, as I explained it that day. You will need to look at that to understand also here the whole play. Yeah, it's better to look that one video right now because I explained it there in 1 hour, almost 1 hour, super detailed about all intentions of the institutions. Don't want to repeat it right now one more time, as it was, in this case, to be honest, a pretty clean situation. I was just super dumb that I didn't take advantage of that. And now, as you can see, we've been here at the top. I just want to go right now of potential short setups from here, because from here the market played out pretty aggressive shorts, and I also lost here a position, so I want to go over that one as well. So more than likely I was aware of shorts and I wanted to take shorts when I understood this situation. Now, problem was just that price manipulated me quite. I thought, well, look at this price order flow, going down lower and so on. So it should continue to go down lower and lower and lower and lower. That was my point. What I didn't kept in my mind, that was here my SL hit, is, hey, these are again kind of, here liquidity, these 2 points, and this is the protected one. So these are kind of liquidity points. And I don't know why I was that stupid, because this was the OB. But you can see also, it was quite a manipulative thing. So I had like my stop loss here, took me out, and then this whole thing cracked down like crazy, right? Oh no, one more time. Yes, that was the point. So I got taken out. Exactly, here I got taken out. So I was aware of this, right? Exactly. And these, are triple highs at some point. And when price dropped down, I was aware, yes, great, I'm in a very good position, son. But then it took me just off. And I was confused, and it's still not a clean situation because you have this OB. This OB was already here mitigated 2 times. But what they did is, hey, equal highs, let's get a run on it, and then let's move down. That was my point, my failure. So I should have been trying it at least here after the reaction one more time on the 5 seconds. You had clean confirmation, and I don't know why I didn't use that. That was so stupid. That would have been one of my greatest trades probably in my life, because I would have been 100% targeting from this top the low. That would have been really crazy, if not even longer, because everything is bearish and we know the point when price is taking out the low here. I would scale in here. Okay, it looks pretty nice that you can scale in here at some point. Now will be again not my time to do that, but I would have been looking for something like this. So as you can see here, boom, perfect, a respect of that. So liquidity just for the OB. And then, it just literally just cracked down, the whole next day. So Friday was super stupid to trade. So for me personally on Friday, no options, no clean options. I tried along, but yeah, failed totally. So as you can see, that would have been really trade off my life personally if I would have been holding that, because my plan was really to expect price now to start some movement to the downside. But of course, with some pullbacks, so potentially, really price coming up higher. So yeah, 220 pip risk reward, why not? Why actually not? Would have been possible with our approach. Okay, so this is a real swing position because we know exactly where price needs to go. So we're getting closer and closer to get to the monthly demand that I'm talking about, and that will be then the point where price will really start with the first movements to the upside. And till then, it would just crack down lower. Now, of course, at some point now, we'll make again some form of this to continue then down lower. But yeah, that will need some time. So I don't map that right now every single option that we had here this day, because there have been a lot of options. So like here the short, right? So short was a clean 120. So you can see 20 is really a magical number here for EU. Then this long from there. And what I map out here, guys, is actually the thing that you should personally try to get on your trades. That's exactly what you personally should look for to trade. Taking out these kind of trades, looking to hold them as long as possible and so on, and really looking to see them coming into play. Okay. I personally, like I said, I always try to close it at 120. That's just my personal trading plan. How I work now for a long time. How I work now for a long time, successful with it, and it just fits me so good because I really don't like to hold trades that long, like it is in this specific case. But I know price needs to go there and so on, so it just acquires a little bit of more self-discipline. In this case, that's something that I personally still work on. So you can see also me, I have a lot of things to improve on myself. You can really trade like a bank, and that's how bank trades at the end, like this. This is how we can really do this. Of course, with multiply scaling positions between, if you really want to trade like the banks. But what I map out here, this is a clean edge to understand where price needs to go and so on. And this is how you can use it, okay? The longer you hold your trades, of course, the higher is the risk that at some point it will just go against you. But if you really know your POIs, and it's the same like on the lower time frames, then you will have here a pretty good successful rate with that. Okay, pretty long video, I guess. So we're right now over 1 hour. So I hope that I could have been giving you here some knowledge and expertise with this recap, going over everything. As you can see, it was not every single day clean. So if this was not your week, I totally feel you, because also for me, it was not the cleanest week. So this is like when I say the 1% which was not clean, there have been a few moments where that was the case. But like I said, it's not because of strategies, not because of these things. It's more than likely because of the overall situation right now is really aggressive. I mean, we have look at the world. But especially in this case, it was because it was a very fundamentally driven week, and institutions will just use this in their advantage. Okay, they will use this in their advantage, and you need to be just aware of that point. So try to not get trapped on these points. Okay, with that being said, guys, I wish you all a nice weekend and see you next week motivated on the charts. Bye bye, guys.